right, good morning, everyone. Sean, I think this is as good a time as any to get started here.
Awesome. Okay. Well, welcome everyone. Hope this reaches you safe and well. We expect that these are challenging times for you and for your businesses, and we want to hear from our clients that everyone's okay. And we're hoping to help use this webinar to kind of guide you through everything. So, I want to round up all of our special group of Airbnb, VRBO hosts, Upworkers, Turo, Get Around, Hire Car hosts, and of course all the other 1099 earners to talk about a market update. I know you're busy, and we are too, so we are going to make sure that we're efficient with the time here. Our goal for this presentation is to make sure our clients are getting real-time information on the government financing programs, as well as the current state of affairs of how the programs are being administered. That also includes news on strategy for both small and large businesses. With that, I want to introduce our managing partner, Miguel Centeno.
Thank you, Sean, and I want to thank everyone for joining this morning or afternoon, depending on where you are today. So like many of you, I'm home in a makeshift office with my family. So I want to share that just as a point of empathy if you're kind of in a similar boat. And in a moment of wisdom, my 13-year-old said the other day, it feels like the house is getting smaller every day. So I highlight that just as context that, if you're in the same shoes we are, we're all trying to find ways to be productive while at home, while we're not connected. And I trust, like many of our clients, you wear multiple hats, not just with a W-2 role and the shared economy business, but also as a parent, husband, wife, what have you. So certainly hearts go out to everybody at home. One thing that we've found that's helpful for us to become productive, I would say over the past week or so, we're starting to find our routine is to set up micro goals. And it's also helped family-wise to keep from everyone from killing each other. But company-wise, client-wise, I think micro goals have been very effective in keeping our focus elsewhere. So as we enter this discussion, yes, we'll talk about the government financing programs, where they are, what we're seeing application-wise, but also I want to use this time to add something to your priority list, a micro goal, if you will, and that's to have a cash allocation strategy, right? So we'll talk a little bit about cash management. I want us to think beyond just how do I get government money. So we will talk about that, but again, micro goals, I think as a business owner, whether you have your own freelancing business or you have multiple rentals on Airbnb or multiple cars on one of the car sharing platforms, we want you to start thinking about these business concepts, and we'll share a little bit about what we're seeing in the marketplace. So as we kick this off, I want to make sure that we have an idea of what we're going to cover. So we're just briefly going to touch on the economic backdrop, what's going on a macro scale. There's also, I think, some important points about what the future holds, and this isn't conjecture, right? For us, as accountants, we are microeconomists, meaning we aren't going to spend a whole lot of time, what if something happens on the macro scale? It's really a question of what does the small individual actor do, and what is the best thing to do given where the economy may go? And we'll touch on that. So SBA update, where we are, program, right? CARES Act passed, really something like, what is it, like a little more than 10 days ago. April 3rd was the opening of the SBA. So we'll talk a little bit about where we are now, as well as where we're seeing the application process going. We'll talk about cash management, and then we want to leave you with some questions around where are you in terms of thinking about business and what you're even going to do with this cash. Because the truth is, some of these funding amounts are not the safety net that we're expecting. So I want to give you that punchline that my challenge to you and to our community of on-ramp clients, retainer clients, clients that I work with on a one-on-one basis is to think beyond just how can I get $1,000 or $10,000. So that's what we'll talk about here. Of course, general disclaimer, right? This is informational. And in fact, a lot of the information changes for us day by day. One thing we'll talk about is that yesterday we got guidance on how the application is being calculated for those who are self-employed. That was yesterday, right? So if this presentation was on Monday, like it was for a group of my select clients, right, this information has now changed. So chances are some of the information that I'll share with you will be further clarified. So just be cautious of how the news is changing. So the economic backdrop. Now, I think, we've seen a lot of headlines, and the biggest one I think for you to think about, I'll put it up front, is, SBA versus unemployment insurance. So in a unprecedented historic move, we are expanding unemployment benefits to the self-employed contractors. And unemployment has been at record levels, never before seen. And from what we understand, unemployment offices are not picking up the phone right now, meaning many of our clients have applied, to give you an update, and haven't heard back on funding and financing. So for those of you that want to understand where my application is, how long does it take, it's really unprecedented. The number of applications are unprecedented, and the process and administration has just never been done on this scale before. So will it take 1 week to 4 weeks? We do not know. In fact, what we do know is that a majority of the clients who applied the second they could, and by the way, you apply through your state, have not received actual funding. And if you've ever applied before, you know that there's a process, an interview process, documentation process. Typically, it's easy because all unemployment offices need to do is verify your previous W-2 income. How they do that for the freelancer is going to be determined at the state level, but the punchline is it's not going to be it's going to be a more strenuous, and a more administratively burdensome process just by the nature of them having to validate your freelance income than the regular process. So combine that with the long line, we want everyone to kind of expectation adjust that if unemployment insurance, which by the way is very, very favorable for many of our clients, if that's the route you're going to go, you're going to have a plan to wait out a certain period before actually getting that funding. So big discussion that I encourage you to have individually. We can't cover all the micro questions here, although we will entertain questions at the end. Is what makes more sense for me? Do I apply for both SBA financing and unemployment insurance? Those are questions that, again, we're going to leave you with. Just overall, right, we've seen the stock market take a giant dive and in recent days come back. I won't give you conjecture. I just want to give you the punchline that is availing certain strategies in and of themselves, right? So as we go through these periods, it's important for everyone to remember that we need to look beyond just what do I need right now and what kind of decisions am I going to make over a longer period of time. So some of you have been asking, what happens if I take money out of a 401k or an IRA with asset prices down? Those are important questions. Again, things for your notes that you should stick with and revisit. This thing's growing, right? I don't need to tell you that. I'm not here to give you the COVID-19 update, but it is a process that looks like it's going to take a long, long time to recover. Those discussing a V recovery where the economy comes right back, that discussion is kind of out of the question. Now, what we're discussing is how long supply chains are going to be disrupted, whether it's going to be 1 year, 2 years, or 3 years. That seems to be the more prevailing discussion. And then last point on the update. So we'll talk a little bit about where SBA funding is right now. The point is going to be that it's being funded very fast. Congress tried over the past weekend to add another $250 billion. They see the writing on the wall that this is going to run out. And now that's caught up in, surprise, surprise, politics, right? Democrats don't think that the next bill is expansive enough. They want to include funding for states and hospitals. The Republicans say, yes, we agree, but we'll do it later. I am completely apolitical. You can't pin me down politically. So that's not a political statement. It is a political problem right now. So $250 billion hanging, not approved yet. And something very important as we get into the SBA funding update. And then just something that I want to touch on in terms of the economic machine is just really us adjusting to what we're calling the new normal. And you'll see that phrase everywhere now. And we were talking about this before it became cliche, but point being that the economy is changing, right? The V recovery is no longer something that we're considering even possible. And the reason why is that we know generally what happens in these types of environments. And this isn't rocket science. Again, this isn't me getting political at all. And in fact, I encourage everybody to separately watch Ray Dalio's How the Economic Machine Works in 30 minutes. It's on YouTube. It is in fact 30 minutes. And it speaks to this in greater and better detail than I'm going to touch on it here. But the point is, right, that most of the transactions that happen in the economy are credit. Something like $50 to $60 trillion out in the money supply are credit, and something like $5 trillion is actually cash. So credit markets really determine the health of the economy for companies, right? For the guests that have stayed at your house over the last 2-3 years, what's been happening? Asset prices have been rising, credit's expanding, banks are giving you money, right? You want to do a $100,000 renovation at a 3.5% interest rate, go for it. You want an equity line for free, go for it, right? In these credit, as well as business credit cards, credit has expanded the number of transactions. And what we know will happen in these events is that people clamp down on spending, credit will go down, and that's going to lead to a recession, or what Ray Dalio calls a deleveraging. And deleveraging events happen in environments like this where interest rates are low. So the banks can't say, hey guys, it's okay. We're going to help the credit markets. We're going to lower interest rates, right? The lever is stuck at 0 right now. And I think that also means that it's a good opportunity to refinance any contracts. I'll talk on that. There's a point on the slide that I do want to kind of give us as context that have to do with kind of renegotiating debt. But point being that what we're going to experience over the next 6 to 12 months, question, is it 6 months? Is it 4 months? Is it 18 months? I'm not going to touch on that. I don't know, but we do know this from history. And again, how the economic machine works, that the period we're about to go into is a continued cycle of less spending, less available credit, and limited options that we have as an economy, micro actors and macro actors, to bring that down. So last point is that there are 4 ways that we typically handle this. These are very relevant. Number 1 is very relevant to what we're doing now. And what happens, right, when in these deleveraging events, you need to stay profitable, you need to service your debt, you're going to cut spending. So cutting spending is one way to handle what happens in deleveraging, right? And that cutting spending is going to allow you to hold on to your assets so that you don't need to go belly up, right? The second point that we do as an economy and that we allow is debt restructuring. So in an event where you have less income because you have less renters, you have less clients, restructuring debt is one way to keep the debt live so the banks are invested while also maintaining livelihood in a short deleveraging environment. So you're certainly seeing that with mortgage refinancing available. I think it's the number 1 time to do it. If you haven't now, I understand that there are credit-worthy issues that are now surfacing because people are getting furloughed. But to the extent that you are able to restructure a big debt, whether it's a vehicle or house, and you have the credit worthiness that you can still demonstrate, this is the time. Now, for reasons we'll talk about in a second, banks aren't doing a whole lot of that right now, but it is I think, mechanism that government's allowing as well with, mortgage forbearance, student loan forbearance. So you're seeing levels of that. Okay, so why are we as a tax firm talking about the macro economy? Well, one, I think it's important to have context, but I think it's also important to understand it within a tax framework. Now, one of the things that you'll see government do in these events is they will evaluate who the winners are, and they will redistribute wealth from the winners in a downtime to the have-nots. And this sounds philosophical, but very practically, what happens over a 2 to 3 year period in these events, you can look to history as a guide, is that you'll see that there will be higher taxes on higher income brackets. And look, I mean, I don't know how the tide's going to change, but if we were talking about Democrats changing the QBI pass-through benefit of an S corp, or any pass-through entity before, in good times, if that's what was on their platform before, I certainly guarantee that you're going to see it as we come out and try to balance budgets. So understand that the environment we are entering to, this part is conjecture, but just historically, we'll see a higher income tax on the winners, meaning, how does Congress check, or how does the government or the IRS know who won last year? Is your tax return. So those that really made it out in 2020 on the tax return, if there are going to be continued tax credits for those who have hurt, there will be some kind of redistribution, right? And the last one is printing money, and I think that's where we get to where we are now, because historically, right, you had the Fed, they would print the money, and then government would use that money to go make investments. What we're seeing today is that the distance between the money supply and the economic actors, the micro businesses, the small businesses, has tried to be narrow. And I do think that I'm grateful in a sense that we're not here talking about, you can see the silly cartoon we had before, right? Which is to suggest that, it's not about, it's not about, being a purist or economic market thinking. This is not philosophical, right? Money needs to go in the hands of businesses. And in some ways, I'm encouraged that this didn't get caught up into a Keynes versus Hayek type discussion, right? We're getting money into the hands, which is why the PPP is so important, as we'll talk about here. So now I want to talk about the SBA update. So there's two primary loans that we look at, the EIDL being one. That's the emergency injury disaster loan. And the way that was, I would say, marketed or presented to the public is, hey, this is a $10,000 grant that if you can show that you've been injured, so to speak, you will be entitled to this money. So everyone thought $10,000, who couldn't use that? Well, because of the oversubscription, right? And what I mean by that is that there are requests, you can see the stat here, $380 billion for a $17 billion program, right? It's an amazing over application. I hesitate using the word over, but the point is that, there's huge demand for this. So SBA come out and said, you know what, we're going to give everybody $1,000 per employee. For an independent contractor, that means $1,000. So again, as I talk about these numbers and I talk about the funds, decreasing at a rapid pace, and applications soaring through the roof, you may feel dismayed. You may feel that I'm saying this isn't worth it, but that's not the case. I'm going to state up front here, while I still have your attention, that it makes total sense to apply right now. It is the game dominant strategy to get in line, because we don't know how the funds, at least the tail ends of the funds, are going to be allocated. So we'll talk a little bit about how to get into that. Unemployment offices, as we said, they're not picking up the phone, right? We don't have clients who yet have said, hey, we've gotten funding, and we're checking in daily here on what's going on. The SBA PPP program is burning fast. So what I'll show you on the next slide is kind of where that is, but also banks are overwhelmed with the procedures. There isn't uniformity. We have helped clients apply on Chase, on Wells, on Bank of America, and they're each very different. So I want to touch on that here. And certainly, if you have bank-specific questions, those are fair for the chat, but we may just address those one-on-one or an email or in a blog post, if that makes sense. But just to give you a sample, Chase had an application process similar to the other big ones, where first you just provided your name. When it first came out, you just provided your name, your business EIN, and your business name. And that just put you in the queue. And then you were invited to fill out the longer application. Part of that was them buying time, but it was also how they established the queue. We're seeing that still exist. We'll call it the queue, then apply. We're seeing that still be the case with certain banks. However, now that a lot of these processes have been streamlined, now you're seeing a comprehensive application process where if you have Chase, for example, you log into your account and you can begin the application behind the door, and that's how you get in line. Now, the difference with at least Chase specifically, just to touch on this as kind of a micro example representative of a larger whole, is that now when you finish an application on Chase, you no longer get the reference number. Now, what was happening before is that when you finish your application, it said, here's your reference number, you're in line, this verifies that you've applied. Now, if you go in, there is now a delay between finishing your application and then getting confirmation and a reference number. Now, that said, we have several clients that have submitted their applications that have still not heard back. And I'm saying submitted the application within 24 hours of it opening on April 3rd. So, just understand that there are tons of delays, and I'll talk a little bit about where things are right now. But before I do that, let me just say Bank of America has an interesting process where they almost have a separate login and a separate place to upload documents, almost like a PPP specific portal. So my recommendation is, we'll talk a little bit about how to calculate this for the self-employed, but my recommendation is that if you can look at your bank's application process and it looks like they have the two-step, first give us your name and EIN, give us the basic information, we'll get the rest later, go ahead and do that immediately, if not right now. If you're at the stage where you've done that and you need to actually calculate your monthly average payroll, we'll give you that here. But if you haven't, if you do have a two-step process and you do step one, just go ahead and do that, even right now while you're on this call. So the PPP update. So first, again, just context, in a typical year, the SBA processes $60 billion in funding. That's how they're structured to work. There's a relationship with the banks, right? Typically the 7A process, as it's called, where applications are run through the bank. PPP is run through the bank, where EIDL you apply directly. We did another webinar. I trust you understand that, but the PPP program specifically works through financial institutions. So typically the infrastructure is set up for you to go to your bank and say, I want an SBA loan. The bank qualifies you. They know all the information they need to ask. And then they're going to take that application to the SBA and get the SBA to guarantee the loan. So that fact pattern still exists. However, the scale at which we're talking is immense, incredible. So just some stats here. As of Thursday, over 500,000 applications were processed. That's shorter than a week, and 141 billion in funding. As of Friday, that number grew to about 180 billion, right? So in a full week, we did 180. And then on April 12th, end of Monday, total funds were at 205. So if you just extrapolate a rate, right, even if it's slowing down as banks start to figure these things out, funds are going to be gone Friday, Monday, right? And this is just me doing math. This isn't my opinion. This isn't where I think the economy is going. This is just assuming a constant rate of application processing. Money's going to run out. And that's why I think it's so important that Congress is going to do this additional 250. I personally think it will happen. I think everyone in Congress knows it'll happen. I think they're just, playing gamesmanship because they know it's going to go through. What can I add to this? And again, I'm not speaking to whether it's valuable to add those things, but it certainly makes sense that they're saying, hey, we know this is going to apply. We want things in there that are going to help other constituents in the economy. So now I want to talk about the application itself. And what we know is that the application has not changed. We know that as a self-employed individual, we know that you looked at this and you said, what the heck do I put for payroll? I don't have payroll. Well, now we know. And on April 14th, we got additional guidance on how that's calculated. If you look at the initial draft of the language from the SBA in Commerce, what it says is that they will take, and there's an or, they will take your 1099 miscellaneous from last year, right? That would qualify as a tax document. And that could be the supporting documentation for an application, okay? Or you could use your net profit from your most recent tax return. Now, that's a confusing or, because if we're talking about your 1099s, that means number one, if you're an Airbnb host, or if you're on Upwork, or on any of these platforms really, except for car share. But if you're on Turo, you only get a 1099K. You guys know this, if you hit $20,000 in revenue and 200 transactions. So, big discussion within that microcosm of, do I even have a 1099 that qualifies, right? And if you do, can you simply take that as your basis for the loan amount? Well, the clarifying rules came out, and I've gotten into, we'll call them spirited debates with clients and bankers on whether this or is truly the case. Because if I see what bankers are doing is they're asking for your 1099 miscellaneous. So they're looking at what was actually, sorry, I completely misspoke there. What the banks are looking at in practice is your Schedule C. I'm going to repeat that because I got it wrong. I'm hearing gardeners off in the distance. These are the quirks of home office life. So I'm going to repeat this because it's super important. The banks in practice and the qualifying rules, if you look at how payroll is calculated, point to a Schedule C. And I know that's going to drum up, I know when we put this out, this is going to drum up tons of questions and people saying, wait a minute, this is what I thought. I'm just telling you what I'm reading. And I'm just telling you what the banks are asking for. But we just got an application approved yesterday for a Schedule C earner. And they looked at net profit. He had net profit of 114. He had gross. If you add up all his 1099s, they were much higher. But because of the limitation, because of two things, because of the payroll interpretation for a Schedule C, and because of the limitation on 100,000, the banker simply said, let me see line 31 on your Schedule C. Okay, it's 112. I'm going to cap it at 110. So that was the annual, I'm putting, you can't see my air quotes here, but annual payroll for an independent contractor. And to calculate that loan amount, so if you're looking at this application, right, average monthly payroll would be where that number goes. And it would be 100 divided by 12 to get the monthly times 2.5. Okay, so it comes out to something like $21,000, right? So point being is that you can debate me if you want on whether the rules say 1099 miscellaneous, meaning your gross versus net. Obviously, we want the biggest loan that we can get, and this is forgivable as well, as you know. But the only way we're seeing banks calculate it is based on the Schedule C so far. And this is a pretty significant bank. I think I can say it's Umpqua, right? They're not a national bank, but they're a very big regional bank here on the West Coast. So keep that in mind. The Schedule C has been what they've asked for. So for clients that have all their properties on a rental form, it's Schedule E, and that's how you run your Turo business or your Airbnb business. There are strategic tax reasons why we may have done that. For purposes of qualifying for the loan, that number is not going to be picked up in calculating the average monthly payroll. And by the way, if you have questions during this, I encourage you to type them in the chat. Our team's going to look at them as we go through. Just while we're on this slide, I want to touch on some things that are confusing clients, right? So one is, hey, which one am I? I have an LLC, but am I a sole proprietor? These are the questions that we're getting. I will say that most applications are going to be eligible self-employed individual. Okay, I want to repeat that because I think it's important to understand that the top four are important if you run payroll, right? If you're an independent contractor or eligible self-employed individual, that's where you're going to go, right? If you don't have 1099 miscellaneous, I wouldn't put independent contractor. I would put eligible self-employed individual. It isn't going to change. Again, the questions are going to be, the distinction is going to drive the supporting documentation. If you're an eligible self-employed individual, they're going to ask you for your tax return and not 940s, 941s. You'll see a lot of requests from the banks, even when you get through, asking for your 940 and 941. So even for this application I'm talking about that we finished up at midnight last night, the bank copy and pasted bank guidelines. They said, hey, send us your tax documentation, had a list. One of those was 940, 941s. The client had told the bank multiple times that they did not run payroll. It did not change the list and request. I came in, I said, look, you don't need a 940, 941, you just need the prior tax return. Banker said, you're right, right? So you'll still see a lot of interchangeability. What we're seeing, bankers are bankers. But we're seeing this a lot where they're saying, send us your tax documents, send us your 940s, your 941s. You don't have those if you don't run payroll. You're not going to have a Q1 2020 940, 941 if you're a self-employed individual. So just understand that the big distinction is, are you on the top row of the entity designation and you run payroll, or if no, you're going to fall into independent contractor or eligible self-employed individual. Number of employees, right? If you're an eligible self-employed individual, you're going to go ahead and put one. Purpose of the loan. So the guidance that came out yesterday is that maintaining self-employed earnings is an other. That's what it would be. I don't think it's incorrect for you to check the box payroll because, again, under this definition of average monthly payroll, right? Put an asterisk on it. For independent contractors and self-employed individuals, those are going to be your earnings divided by 12 times 2.5. So in that case, the purpose of the loan would hit payroll, or you could say other, maintaining independent contractor salary or or self-employed earnings. So the other rule that I'll just hit on is that the rule clarifies that self-employed individuals who filed the Schedule C with their federal income taxes and were operating on February 15th are eligible for PPP loans except for partners in a partnership. Okay, so I just wanted to read that for you, and I'll read it again just for your notes. So the rules clarify that self-employed individuals who filed Schedule C with their federal income taxes and were operating on February 15th, 2020 are eligible for PPP loans except for partners in a partnership. So for everyone that's been asking me, do I qualify? That's going to be the default rule clarification. So given that, I know that I'm in some ways, realistically adjusting expectations on the PPP. The question that I'm asking our clients is, what happens if the line's too long? And it's a fair question. No one wants to hear it, but look, I'd rather shoot straight and get you thinking about the what next question. But again, I think our recommendation is the same. Go out and apply. So go out and apply, but also think through what happens if, the SBA is going to get out, if funds are going to run out completely, right? What does that mean for you? And what we want you to think about to that extent is cash management. And when we talk about cash management, what I'm really saying is, look, every business is a product of their capital, right? It's capital in what you fund the business with. If you're a freelancer, your capital is mostly time, but there's also some money that goes into setting it up. And if you're an Airbnb business, of course, there's a lot of capital that goes into buying a place, remodeling it, and so on. But it's only a business if it generates capital back. And the question that every business is grappling with right now is, how do I allocate that capital in my business? And some of you might be saying, Miguel, I don't have any capital, right? Like, I'm down to $1,000, but still this is going to apply because the things to think through are things that much bigger businesses are thinking about right now. And in fact, if you look at some of the headlines, you'll see that CFOs are saying, we need a liquidity strategy. That's short for saying we need an F ton of cash in the bank to weather the storm, because we don't know what's going to happen. So what do, right? We've talked a little bit about what they're doing, and you're seeing massive cost cutting. And those are cost cutting on variable expenses. You're seeing that fixed costs, which are very difficult to go away, our fixed cost purchases are being deferred or delayed. So you're definitely seeing that. But the point that I want to make is that these are not strategies that are simply being done to increase profitability. The reason we're seeing this is because businesses are trying to shore up liquidity, and they're also going out and tapping bond markets and credit lines right now. So if you'll see the bond market is going crazy. You're going to see over the next year companies issue bonds to shore up cash. And in one, I think, kind of very extreme example, you're seeing Anheuser-Busch, who, by the way, is taking a huge hit in terms of on-premise sales, right? At-home sales are up, sure. We're all drinking a little more. Not all of us, but I'm guilty. And we think, oh gosh, these guys are making so much money, but they make all their margins on premise. So what are businesses that are doing that are significantly impacted? And I don't want to talk about Airbnb, because Airbnb itself is a completely funded operation. So I don't want to look at businesses that aren't profitable. I want to look at businesses that have capital allocation and are being hit significantly by COVID-19. What are they doing? Well, I'll tell you, Anheuser-Busch, their strategy is to have liquidity to cover operating costs for a year. That's unheard of. If I asked you, what do you think the average run rate is for companies publicly listed? And I'll actually ask clients this all the time, and I want you to think about a number. I'd write it down, but if you think a number in your head, how many days do you think the average company can run without an additional sale? It's surprising to me. I don't know, maybe it's not surprising to you, but the average number is 23 days. So having a year of liquidity could just be a statement, right? Could just be kind of level setting, and maybe they get to 3/4 of a year, not a year. But to say we're going to have a year of liquidity to help us manage the year, beyond the short term, is a very bold statement, but it brings us back to cash and capital allocation. So again, the first level, anytime you have cash, you are consciously or unconsciously deciding how to break it up between these three main buckets. And I'd encourage you to move into the conscious category if you've been doing this unconsciously. But the first level is going to be your business funding. So you need money to run your business. Within business funding, we have two main types of costs, right? We have our variable costs. So maybe we were going to Costco and getting, guest supplies, right? Guest amenities, and things that kind of increase and decrease with our preference or activity. Those we can cut, right? We don't need to go to Costco right now. It's certainly true as well for, I think the nice thing about freelancing is most of your costs are going to be variable, and those are going to come down with sales. But again, variable costs are the easy ones. The difficult ones that you need to be mindful are your fixed costs. And that's what we're talking about, your mortgage, That's where we're talking about any recurring expenses that aren't going to go down with activity, right? So utilities might come down. Those are variable if you're an Airbnb host, but your mortgage isn't, right? And this is independent of renegotiating or forbearing. And maybe your security alarm system, things like that, right? So be conscious of what your fixed and recurring costs are. And recurring costs aren't always fixed, meaning if I have a subscription, I might cancel it right now. Again, be mindful of what your fixed costs are, because that is going to be your multiple. So if you say, hey, my fixed costs are $1,000 a month, then I'm going to say, what multiple of that do you need to feel shored up with? Is it 1 month? Is it 2 months? I think in times like these are questions to ask yourself. So again, questions I'm leaving you with: how much cash would you need to stay afloat 1 month with your fixed costs? Many of you figured this out already. Okay, now once you have that number, for security purposes, what would you need over a multiple month period to feel secure? And what we're realizing now is that people that thought I could survive 1 month, I have an Airbnb and it cannot be rented until April 30th. Do I think it's going to be rented on May 1st? I have no idea. So where I was thinking, okay, hey, we're good with 1 month. As this has gone on, we've started to ask the question, okay, what's the number at 2 months? And who knows, maybe we do this call in 2 weeks and we're talking about having business funding for 3 months of recurring monthly expenses. So these are the questions that I want you thinking about, because I'm thinking about them with clients. And the reason you think about it is because if there's a need, meaning if there's a gap between what's in the bank, what's in your personal bank that you can allocate to the business, then again, we need to figure out how can we grow the amount of cash that we have. Is it coming from us personally? Hopefully it will come from some source of government aid. As you guys know, we're hearing from clients. We're seeing that $1,200 from Treasury is starting to hit. That stimulus check is starting to go out, right? So these are the types of questions you need to ask within this category of business funding, which is, how much capital do I have? How much capital do I need to maintain security over the next question mark period? The second part, again, has to do with reinvesting in the business. And these are things that are going to generate either income in the short term, right? So if I increase my sales and marketing, if I create a flyer to connect with more individuals as a freelancer, or if I have a hire car, for example, and I'm going to invest money in connecting with Uber drivers that might want to use my car, right? That's investment that is going to generate cash flow in the future, right? So you're kind of borrowing against the future with reinvestment. The tendency is to drop that to zero during these times. That's a question as well. How much reinvestment do you do during a period like this? And the answer might be zero, and that's fine. But the point is that you need to think about it. It may be fine, I'm saying. I will say that what we know about businesses, right? The businesses that survive the longest, that pick up the quickest in a recovery scenario, are the ones that reinvested at some level. So I would encourage thought on reinvestment in any economy. And it also includes, reinvestment also includes efficiencies. And those are things that are going to reduce your costs over time. So maybe you spend a little more today. These are going to reduce costs over a long time. And part of that might be being strategic about your tax structure. It might be organizing your finances, right? Maybe your investment is in time, you're getting a little help, and you're getting very clear on this, but these are things that are going to stick with you over the long haul. So our punchline is always, reinvestment should always be thought about, whether you're adopting technologies or systems. And look, these apply for everyone. So, for example, again, we have Airbnb clients that say, hey, I spend way too much time on you fill in the blank. And there are likely automations there that are going to help you. The last one is profit, and I'm generally calling it wealth. So what that means is that part of the capital in your business you should take out. Again, during these times, we're asking clients, hey, what's your cash allocation strategy? They're saying that's going to zero. So as you look at what, not just the cash in your bank right now, but if you think about capital over the next year, we don't know where the economy is going to go, right? But the economic backdrop is that things will decrease. Of course, there will be a rebound to normalcy. So, what happens when Airbnb again allows traveling to happen, non-essential travel? What happens when governments open up slightly is you will see, for sure, you will see people come back and say, I want to get out of the house, as reasonable as it is. And in California, what the governor's talking about is having waiters wear masks and gloves. These are types of things that I think you're going to see. And we follow a lot of influencers in this space. I think freelancing, you're just looking for the economy to come back and businesses to have faith that things are going to pick up to reinvest in your service. But, I would say that for ride share, car share, home share, those require people traveling and being comfortable out and about. So I think what you're going to see is some adjustments there. Our rideshare drivers wearing masks, our tour hosts finding ways to do remote check-ins and check-outs, which are already done. Are there going to be, verification processes to make sure that you sprayed down and disinfected your car? What if they have a little kind of checkbox placard, right, that hosts use universally that means that I disinfected everything? These are the things that I think are going to unveil themselves over the next quarter or two as activity starts to come back. There's certainly going to be a normalcy bounce back. So I don't foresee us at zero for the next 2 quarters, but there will be if you're expecting the same level of activity that was going on beginning of Q1 or Q4, you just won't see that, right? So the bounce back does bring you back to a new normal. And as you're thinking about that capital, right, knowing what you know now, how much do you put in business funding versus take off the table? I still encourage all our clients to take cash off the table, right? So from a tax perspective, of course, we're always talking about getting your taxable profit down, but it never means getting your cash draws to zero. So again, these are conversations that we want our clients, if you haven't thought about these things, to really get deep into what these mean. So just to summarize, right, it's all about cash flow. That's what matters. As cash flow falls, the tendency is to freak out, bring important categories to zero, but consider the long-term view. And look, the businesses that can maintain cash flow, this doesn't mean grow cash flow. This doesn't mean, change your life, upgrade your car type cash flow, but the businesses that can maintain cash flow and reinvest are the ones that are going to win over time, right? There's going to be cheap assets on the market over the next 6 to 12 month period. And I'm not saying you should be opportunistic in the sense where you're blatantly taking advantage of people struggling. But look, this is a free market system. There is somebody that needs to offload a recent car they purchased. There is someone that needs to sell their second or third home because it's just not worth it. Who's going to be there? It's not going to be, who's going to be there to shore that up? It's usually not the frightened micro investor. Okay. And this is kind of the punchline where I'll end things, because it's super important that as I advise so many, I'll call them micropreneurs, micro businesses, is I want you to look at what the big guys are doing, because what they're doing is they're staying rational at some level. And they're going to be the ones that buy these things up. I want you there as well. And you're not going to be there if you're simply focused on how do I get $1,000 in my bank with the EIDL. You're not going to be there if you're saying the only thing I want to hear about, talk about, think about is where I am in line. Think beyond that and think about strategically where the business is going to grow, what your opportunities are going to be over the next 6 to 12 months, because someone needs to be there to shore up these assets. And those that are able to reinvest reasonably, right? Of course, take care of yourselves. We want to make sure that your family's taken care of, that you're not struggling, but do not forget about reinvestment over time, because you've gotten here so far. And if you're on this call, you've had some level of success with business. We want to make sure that continues. So now I want to push it over to questions. we will entertain as many as we can. I know Sean's watching the chat here. It looks like we've got some minor questions, but if you have any questions, go ahead and take the time to put those in. Now, Sean, I'll invite you back. Did you see any questions, or do you want to ask me anything that maybe I should clarify over this?
I did see one from Vanessa. She asked, what if you had no profit from your business from last year due to expenses and deductions? So I think she's mostly talking about startup businesses.
Yeah, so the requirement is that you have a Schedule C. The default is going to be that it's going to be calculated on that tax return. But in these situations where the business dynamics have changed in the tax filing year and the current year, is that you're going to need some kind of documentation showing how you've done from January to February. And that's where, bookkeeping comes in, because what we're doing now is we're signing off on bookkeeping statements to say, yes, that's what the tax return said. But look, January, February, things were normal, right? I mean, I know for us, we were seeing, it's actually even hard to think about, really, that if you asked anyone how the economy is doing in February, if you listen to our president, right, things were better than ever. So the argument is there to be said, look, this is how we did January to February. So our average net income is this number, right? You would need to show some profit if net income is the driving factor, which we're suggesting it is. You show net profit over that 2-month period, you take the average, and that becomes your loan amount. So we have submitted applications where the prior year tax return was in a loss, but we've presented financials and a cover letter that have asked the bank to consider the most recent financial statements. So that would be it. But what I might do if I were you, Vanessa, is connect with your banker if you can, and ask them what their interpretation is. Because again, I mean, I tell you, I've been in these spirited debates, we'll call them, with clients no less, who are challenging me, which I like. So feel free to challenge me if you hear anything that that needs challenging. Is that, hey, we think it's gross, right? Like, why would you punish us for all these deductions? And look, that's not for me to interpret, but I am getting pushback, and all I can tell you is that I know clients have applied based on gross. I don't know if they will get approved based on gross when the net profit seems to be the clarifying rule.
Awesome. Okay. We have quite a few questions coming in. I don't know if you want to pick and choose some of them, or if you just want to run through all of them.
Yeah, no, there's some good ones. So I think, I'll just kind of look at these, right? So we're always, guys, so the reason we're kind of hesitating is we always want to move very specific questions to a one-on-one discussion for many reasons. But let's kind of break down this one on the 401k. Sean, you see that?
Yeah, I do. So what are your thoughts on the 401k withdrawal?
Yeah, so it seems like a two-part question. So let me unpack them kind of separately here. So the withdrawal allows you to defer any penalties and gives you a longer payback period. Again, I mean, that's a very thoughtful capital allocation strategy, right? But see it within the realm of capital allocation. If you're taking money out of the house and it's a business home, and you just need it to pay personal expenses, what you're essentially doing is going back to our capital allocation slide, right? And if you think about there being a percentage in each one, like if you take that money out and you're using it specifically for the third bucket, profit, dividend, wealth, then what that means is you're taking money completely out of the business, right? The business may as well go kaput. And if you need that, then again, that's a specific discussion that you have with your advisor. But as a pure business play, we would encourage you to split money across these three places to keep the business going, alive, and positioned for recovery. So the big question, I'm going to say, it's a low interest way, right? Low interest, low risk way of getting capital, going and tapping into your 401k. Whether you want to sell in this economy, in this market, is a discussion you should have with your advisor. And, we work with Chris France, who's been on webinars with us, and he will really challenge you to think about what it means to freeze your loss, right? And what that means is, hey, you've taken a big hit. If you wait 2-3 years, that'll come back, right? And if you wait another 6 years, that'll grow. But some of us don't have the luxury of waiting, right? So that's what we kind of will remind our financial advisors. Some of us actually need this capital. So really weigh whether that makes sense, right? You're going to lose money from a sell-off perspective, right? If these are, so that's going to apply to a tax-deferred account. So I'll leave that there. If you sell in a non-tax deferred account, something to take into consideration is that you're going to have capital losses. Do you need those right now? I mean, I think right now the onus is on us to increase our capital and our liquidity strategy. So different ways to kind of solve that. And then, I see a question here about, does it make sense to refinance if you're only taking out the cash? Again, it might. We want to give you kind of the tools of how we think about it, how we might start thinking about it. And if we speak with you, we hope that you've done some kind of thought process on how you put percentages on this. And even feel free to take a screenshot. And if you ever send me an email, you're like, hey, I'm going to be, and by the way, what we're seeing right now is, 80-10-10. I would say that's typically kind of the overall benchmark in a down market, meaning you want to keep the business alive. You're going to reinvest 10%, and you're going to take off the table 10%, right? Or you'll see something like 80-20-0 if you don't need the cash. But again, these are all things that if you send me a screenshot with your percentages, I'll know exactly what you're thinking about, exactly what you're saying. Sean, any other ones you want to throw out there?
Yeah, I think we have one here from Danielle. Do you know what documents they might be requesting to prove employee verification and payroll verification?
Yeah, so again, this goes back to the point I was saying earlier, which is banks haven't necessarily updated their language for self-employed or independent contractors. So if you're freelancing, if you big 1099 income, and they're asking for employee verification, you are not going to have it, right? You're going to have a tax return. You say, look, I'm a self-employed individual. There's no employee verification. I can write a letter for myself if you want. And then the second point, if they're asking for 940s, 941s, those are not going to apply because you do not run payroll. But again, we're seeing banks just copy and paste the language that they understand. If you read the rules, you press a little bit, right? And again, the people that take in the loans, the loan application, people that are helping manage that process aren't necessarily the loan verifiers. So I think you've got to kind of push back on who you're talking to and say, look, I don't run payroll, so I don't have 940s or 941s. My tax return is the word is sufficient tax documentation. My last tax return is sufficient documentation. And again, I mean, those conversations are not happening as smoothly, right? Because somebody that's got 100 applications to process, they're going to see you pushing back. Are they going to come back and say, you know what, you're right? We've seen that, but I understand that this isn't as simple as you kind of presenting a checklist or a PowerPoint presentation that your tax advisor gave you and saying, no, look at this, right? So, but I do think that the facts are clear. You don't have 940s, 941s. Don't have
Miguel, I do have 941s and 15 employees, and I still don't understand where, I've submitted the 941s, and then they're asking for employee payroll verification, and it's for a different business.
Gotcha. So what I was speaking to is the independent contractor.
Yep.
Yeah. So I'm speaking to the independent contractor who's going to, looking to provide the right documentation. But if you're talking about submitting it as a business, then, I mean, I don't know, you have 940s and 941s. They want to see Q1, is that it?
They want to see employee verification form and payroll verification form in addition to 941s.
Mm-hmm.
Is that just like
yeah. Yeah. So I don't know what those forms are. I mean, maybe we connect offline, but the 940s and 941s, I mean, Q1 is out right now. So what we're seeing with a lot of banks is they're saying, hey, just send us Q1.
Okay.
What more verification is Q1? Today was the deadline for Q1. So that should be available through your payroll processor.
Okay.
There's no better verification of who's employed today than that 940. If there's a form that they're referring to that's internal at the bank,
okay, but I don't.
You might want to. Yeah, you might want.
I'll shoot you a screenshot. Okay, thank you.
Sounds good. Thanks. So someone else asked, a lot of the banks are offering personal loans for people, businesses impacted by COVID, low rates. Would you consider this an opportunity to restructure business debt? So if you're saying that you have credit card debt sitting on your balance sheet that's at 24% APY, and you can get that down, absolutely, right? So getting back to the business funding bucket, one of those key fixed expenses is going to be your debt servicing. And I mean, it's going to vary, of course, based on the balance, but what I mean by fixed is that it's not going to go away, right? And it's one of these scenarios where, wait, do I pay down my debt during this time? Again, capital allocation strategy says that you want to have money for future business expenses. So these are typically not the time to pay down huge amounts of debt unless you're refinancing. So yes, I would consider that a pretty optimal way to restructure. All right. So guys, I want to thank everyone for their time here. We're going to wrap, we're going to disseminate this out, and we're going to continue to have these, we'll call them monthly calls with our on-ramp VIP retainer clients to make sure that we're, hearing you. So if you see something, again, let's go to our last slide here. We are severely impacted as well. We're not going to put something up on our website that says don't call us, but just understand that, for me, it is taking me 2 to 3 business days to get back to everybody. We're also completing tax returns, completing PPP applications. So the best way to really get on our radar is to leave a voicemail. If you are in a current retainer on-ramp program and you want to schedule some time to connect, I have a booking link. You guys know I'm not able to take calls outside of my on-ramp availability. So, best way, again, if you want a 48-hour response instead of a 72-hour response or longer, Sean can send over a link. And of course, if you absolutely don't hear anything, you can go to our Get Started page, submit a contact form, just giving you different ways to do it. I just know that clients have kind of said, hey, where are you guys? I think generally everyone's doing a good job. If you're in a tax return right now, the tax pros are going to be very responsive. But my time is nowhere to be found anymore. So thanks, guys. Again, thank you all for your time. We'll send this out as well as kind of a summary email with kind of the main points. We do expect to continue to track the business funding amount. And then, of course, if there's a capital allocation strategy conversation that you want to have one-on-one, best way to do that is to get an on-ramp link. So I'll talk to everyone later. Thanks for joining.